Mr. Brandon Munro, welcome to London, sir.
Thanks, Matt. What a pleasure to be shooting the energy show in your midst.
Live from London.
Live. Well,
Fantastic.
I'm alive, that's for sure. $100 uranium. I'm feeling very alive. What about you?
Well, I bet you are.
Yeah.
I'm about to say, we're going to go and celebrate after this. Breaking $100 it happened really quickly. Surprise,
Yeah.
right?
Yeah. I mean, September, we were delighted when it broke through $70.
Yes.
And now we're at $100 already. And the last jump, which we'll talk about, overnight, 94 to 100. So up more than 6% in a night. Now, there's some good reasons as we switched on our phones this morning as to what the people were thinking when they were prepared to pay $100 a pound. But the point is, triple digits already.
Yeah. It's amazing, actually. And we can talk a little bit about geopolitics, as we always do. For the last three and a half years, we've been talking about the influencers and drivers. So it's not just as simple as, demand and supply. It's who's driving the narrative and actually where that uranium's going, east or west. So we're going to start with a little bit of, I'm going to go east news, Kazatomprom this morning.
So that's obviously who was prepared to pay $100 a pound, suspected that perhaps Kazatomprom is having some production issues. And in fairness, it hasn't been a particularly well-kept secret within the industry.
Yeah.
So for everyone, let's do a quick history lesson.
Yes.
Kazatomprom, largest producer in the world. Kazakh materials responsible for about 40% of the world's uranium, ranking them by far the biggest uranium producer in the world, with Canada and then Namibia still standing on the diet second and third place. Enormously imposing. If you compare that to Saudi Arabia's influence, what are they, 14% of world oil? So it's an enormous imposing production level and very influential for that reason. Back in 2017, we all got excited out of our sort of uranium slumber because Kazatomprom announced that they would reduce their production by 10%. They'd go down from 100% production levels to 90%. And I can remember our Bannerman share price tripled in about 3 weeks. And so our shareholders enjoyed the news. And then a year later, or at the end of that year, they announced, well, that wasn't enough. We're going to take it down to 80%. And that's important because under the Kazakh mining legislation, to get a subsoil use contract, which we would call a mining license, you have to commit to a particular production profile for each asset, and you're only allowed to go up or down by a maximum of 20%. Otherwise, you have to go back to the government and renegotiate. And even a state-owned entity like Kazatomprom doesn't want to do that. So they took it all the way down to the bottom corridor of 80% less. This year was supposed to be the year that they returned to 90% because, pretty good conditions and a good price and very profitable. And overnight, they've just announced, sorry, that's going to be tough. Acid availability is the primary driver and the primary reason. They're struggling to get enough sulfuric acid. And, we're led to believe that it's pretty challenging out there generally, trying to push those assets harder than how they're producing at the moment.
The realities of mining hitting home. Now, given that they're such a major contributor and producer and supplier to the world, obviously more recently they're the production talkers heading over to China. But how does a company like that, who've been doing this such a long time, find themselves in such a mess? It's not just. Surely it's about planning. Surely it's about making sure you can secure the asset. Surely it's about not overstretching yourself when it comes to commitments to contracts which they have signed all around the world. That's going to make they clearly have made a lot of utilities very, very nervous if the big guys can get it so wrong. In a relatively small and therefore nascent sector, how many more companies will get this wrong? Whether it be the build-out phase, the ability to produce effectively and commercially, by that I mean economically, and then stay afloat. Utilities are going to be hedging their bets left, right, and centre, aren't they?
So look, a couple of points here, Matt. The first one is I wouldn't be nearly as critical as you just have been, in the sense that it's not a mess. It's just what happens in mining, particularly with in situ recovery. You don't have the same level of control as you do if you're actually digging the material up, seeing what it is, measuring it on a radiometric scanner, which is what we will do at Bannerman's Tango project. You just don't have that control. So I don't think it's about finger pointing. I don't think there's a whole lot to blame. I don't think it's poor planning. It's just life with mining. And if you're in a country that doesn't have a lot of excess sulfuric acid, as the Kazakhs are at the moment, they've got very good copper sulfide deposits. They produce a lot of acid, but they've probably decided to sell it elsewhere. And in that situation, you're at the back of the queue to find that asset.
If I'm a shareholder, I am going to take the stance of you need to get more organised, guys. Yeah, I'd be kind of furious because if it was entirely, I know it's partially public, they would be hit really hard by. It's kind of like when companies were sort of just in time with their inventory and supplies pre-COVID, and then COVID comes along and says, well, actually, maybe that's not such a good idea. We're all going to be short on a lot of stuff here. We're going to have to build up our inventories again. It's that risk management component that kind of worries me from a big guy.
Well, let's wait and see what shareholders think, because this is an OPEC-like situation. They can say, right, we're going to miss our production by 10%, and their revenue could go up by 20%. How good's that? They're such a big producer.
This is true.
Well, it moved the uranium price overnight by more than 6%, so they're kind of nicely hedged there. So I don't know how many shareholders are going to get too excited about that. There's a lot of shareholders in other uranium companies who are very excited, mind you. But if we come back to what does it really mean, what are the implications? First big implication is, together with saying they were going from 80% to 90% in 2024, they also said, and we'll be back to 100% in 2025. That's looking like a sort of a political type announcement now. And that now looks pretty unlikely.
Okay. So what are they doing now? They're out in the open market clearly buying. Not a lot around, so that's going to drive the price. Is it? It's not. I don't think it's helpful for me, because they kind of create. Is it going to create a spike and it's going to fall back down, or are we going to see sustained? I kind of like this slow growth. We're going to see nothing like it, as you say, since September and the year before. Quite frankly, we've made from 32 to 100 in very short order. Is that a good thing? Is it going to make people nervous? Are you going to see shorters in the market? Is non-believers? How do you play this? Well, you say that to Mr. Borshoff at the moment. I think he perhaps would like to have a discussion about that one. But do you think we'll see more of that, or do you think we're in for a good time?
I think we're going to see more volatility. Everything points to that. I'm in London because I've been talking to a whole host of traders and utilities and other market participants around World Nuclear Association working group meetings. There wasn't a single conversation where someone said, $95, it's going down.
Right.
Everyone acknowledges that the risk is to the up.
Okay.
Now, where the conversations stop abruptly with the utilities is when you ask them, well, how far?
Yeah.
120, 150, what's possible?
Yeah.
And we just need to remember that this uranium price, this sector, prospered as a result of the oil crisis in the 70s. And in real dollar terms, uranium price spent 6-7 years above $200 in today's numbers. So the sector can thrive, and the sector is about to thrive. The positive momentum amongst a host of different announcements is extraordinary at the moment. Just this week, just while I was talking to all of these groups at WNA, we had the French announce that they're going to go from 18 to 14, from 8 to 14 reactors.
Yeah, phenomenal.
Yes, we're starting to see some of the follow-through.
Are they smaller? Because they were at 70% on 8. So what does 14 do for them? Are these smaller in the sense of the reactor sizes or not?
No, they're EPRs. They're 1.6 gigawatts.
What are they going to be selling it to Germany?
There's an idea. Do you prepared a marketing plan for that one?
We've got a German in the background. I've got to be careful.
We've got the French audience
lobbed over. I think that's really interesting. So the French are already kind of one felt maxed out. and name a country that's not. That's that'd be a great Christmas game.
They're pretty well catered for electricity.
Yeah,
but electricity growth is going to grow by so much.
Yeah,
they're building these 14 reactors for decarbonising industrial heating, for providing district heating, for hydrogen production,
cars,
for electric vehicles, the additional take on electricity on the highways.
German industrial.
The difference, and of course,
it's a serious point.
It's going to be a field day selling electricity and other forms of clean energy into Germany. So clearly they've got a vision. Their vision makes sense. They're not blinkered about the role of nuclear energy in the broader decarbonisation debate. And what people forget is when you talk about energy, well, electricity is only 25 to 30% of that. Most people think it's all about electricity, but it's a small part. And when it comes to decarbonising industry, it's very challenging for anything except next generation nuclear.
So before we bounce over to North America, I've got to talk about one of your countrymen, Fortescue. What? WTF, I think, is the polite phrase, saying nuclear, there's the chairman or CEO, I can't remember. He's saying nuclear is ridiculous, too expensive. It's wind and solar for us, and it should be for Australia. So am I? Interesting. Where is Australia? I thought the politicians were starting to talk, positively about it. I thought the narrative was changing, and certainly market leaders like Andrew Forster, Fortescue should be really pro-nuclear, but that debate still runs over there.
Yeah, it's still running. Look, I haven't clocked those comments from Andrew Forrest. I've nicely insulated all the way to London, or maybe they came out when I was on the plane.
But
some advantages to having your Wi-Fi off at times like that.
He's
been a huge proponent of green hydrogen. And he's got no choice at the moment because Australia's got a ludicrous law against nuclear energy. And that law is overreaching into what's economically good for the country and what's not. And last time I checked, it's markets who determine that, not governments. But anyway, be that as it may. So his only option to become a czar of green hydrogen in Australia is to go with wind and solar, because the best and most effective solution, which is high temperature gas reactors and even conventional nuclear, which enables hot electrolysis, not crappy cold electrolysis, not available to him. So he's in a corner there.
Talking his book.
Well, I suppose so. His rich list contending cousin in the form of Gina Reinhardt, she's taken a totally different view. And she's calling it for what it is. It's crazy that Australia thinks it's got any hope of decarbonising, maintaining the economy and the lifestyle and the industry that we've still got, unless we go down a nuclear path. And it's been really pleasing to see how vocal she's been.
Okay, so in the case of Australia, you pick the billionaire whose opinion matches yours and you'll be fine. Good.
Well, BHP is saying the same thing.
I know. I joke because
the iron ore battles, you've got in the blue corner, you've got Andrew Forrester, Rio, who are scared to say anything that could be controversial for anybody. And then you've got BHP and Gina Reinhardt in was that the blue or the red corner?
I know, but it's kind of funny because I kind of grew up with my old man and business all around the world, and he had worked with people like Larry Ellison at Oracle and the great and the good, right? Sometimes we could name drop a few, but because you made money in one area and you did really, really well in one area, it became very apparent, even when I was quite young, didn't make you an expert in all other areas. So the kind of commentary...
Your lane doesn't just go like that?
You suddenly become very clever. No, it's not true. And people will follow you to a degree because you made a lot of money in one area. They think you're a billionaire, so you must be super smart on all topics. So far removed from the truth. And we've got some fantastic stories. Maybe when we're having a glass or two of wine tonight...
Celebratory glass.
Celebratory, 100. It's a centenary. We can tell you about some of those massive mistakes and huge amounts of money lost by these genius billionaires. But we can't get it right. All of us can't get it right all the time. Let's bounce to North America because I think some fantastic things happening there at the moment. We've seen a lot of M&A. Saw a fantastic. In fact, I spoke to the CEO last night of Atha Energy. They've kind of brought together Your Kazakh 92 Energy. I told you he'd get his own barrack. These Germans.
That's seeing a laugh when Germany loses another 10% of its industry for lack of...
That's right, he's right. Switch your lights off.
It's like, another 10%. Boom.
That's right.
Mel.
So we've seen After Energy. I think it's a great. They brought together 92 Energy, Siobhan Lancaster's company, Latitude Energy, and they also had, I think, a 10% option on 10% of the ISO Energy and NextGen's properties also. So basically, they've circled the wagons around the Athabasca Basin. It says sensible guy,
and other jurisdictions in Canada as well.
Right, but what I like about it is there seems to be a sensible plan, and I like that. But that's one. We've got Consolidated Uranium with their portfolio of whatever they've got. We've seen UEC and Denison do the same sorts of things. A lot of money around. We've had these conversations offline about the amount of money available for looking for good uranium projects and to back teams and so forth. So I like the consolidation play. Again, I didn't expect that to happen so quickly, but I like that because you've got to go and try and find the good stuff quickly, because all the crap is coming out of the back of the drawer, being dusted off, and we're seeing a lot of new projects we said that would do, but it's not so a good thing for the sector as a whole, I don't think. I think it distracts. I think some of these projects are never destined to produce, and I think that investors like us will have a lot of value destroyed by focusing on money and getting excited about promotion about something which is never, ever going to get into production. And if you want to play that promotional game, that's fine, that's on you. But for me, and certainly our family also, when we're chucking money at stuff, we want to back good teams with good assets which actually have intent to get over the line.
Yeah, so I hear you, because you've done enough M&A, I've done enough M&A that we know that 1 + 1 sometimes equals 4.5 and sometimes it equals 1.5.
Yeah.
Right, and we can read through a transaction and at least have a view on if it's adding value or if it's more just about trying to get bigger for extra liquidity and so on.
Yeah.
But it's an exciting moment for promoters that doesn't always generate value. And we've been very disciplined at Bannerman about M&A. We've had a look at a lot of different things.
Hey, by the way, well done on the mining license.
Yeah, thanks. Well,
that's it.
Exactly.
Puts you in rarefied air. Really does.
It puts us in a very unique category.
Yeah.
Because we're shovel ready with a big project, expansion potential. So what we've come to realise from an M&A point of view is we've already got a pipeline in the sense that our initial phase is £3.5 million, and we're now working on exactly what the expansion case to £7 million would look like.
But you already done most of the work on that, years ago, no?
We did, yeah.
You started bigger and then kind of got smaller, which is funny to me because it was like a reaction. When the market was tough, people were like, that's too big. We got that thing financed. I think today, but yeah, you would. But you've got both. You've got the option on both 3.5 and 7.
Yeah. Better going 2 steps than one single step.
Interesting.
And that's what's really nice about it.
Is that around the cost of money? Because you've got revenue, you get flowing.
Yeah.
Right.
Yeah.
Okay. Brilliant.
Yeah, all of that.
Yeah.
So, but what we've come to realise is, well, in fact, we've got that pipeline, and as we started to think about it, we thought, so what does that really mean? Well, it means that we can bring on totally at our option another project in the same ore body that we understand, with the same employees, with a few extras, same jurisdiction, same stakeholders, same transport infrastructure, everything. So I can make the argument that it's got a huge advantage on someone buying another project and bringing that into construction.
Well, me with my banking hat on, I'm talking to you about that, and you go, right, oh, he's done it over here. My confidence is so far, further ahead. And the money would be cheaper, and all of those good things. If you wanted to do and replicate that again, of course. But I guess it leads on to another question here, and that's got to be around, in terms of, again, wider market type stuff. We've
and we mustn't leave North America because there's been some big news this week.
Yeah, no, we love North America. We really, really, really do. And I do want to talk about it because it's like. Like I say, the M&A is one side of things, but there's some lots of other things happening there. For you and at Bannerman, you've got to get this thing financed, right? You've got to time that, right? So are you nervous about starting that process of financing, or is it really just a question of timing the conversations to match when the contract price catches up with, or is seen to catch up with, spot price? Because at the moment, what is contracting at roughly?
Well, the latest print on the contract, the long-term contract price is $68.
It's all a bit opaque, so it's hard to kind of get a finger up. It's roughly there or thereabouts, isn't it?
It is, but here's the thing. I'll come back to talk about those other aspects. What happens in contracting and reporting is the contracting process from when you would put a proposal or respond to a request to a utility, put the number in, that they go, all right, fine, we'll do it. Then there's a term sheet. Then there's putting it into full contractual form. Then you ink the contract. Then you tell the price reporter.
Yeah.
So in an efficient market, that's about 2 months.
Right.
So we get a print, or we get a recorded price.
Can that number change throughout? If you start...
Not typically.
No, okay.
Not usually. Right?
So you don't necessarily want to rush into that conversation right now, do you?
Well, no, and we haven't been. But the point is that $68, you might say, why is there such a big gap between 68 and 100? Well, probably we were trading $70 spot when that 68 was done. So there is a big lag, and for many investors, they're not picking that. They don't understand that there's a natural lag built into the system. And then there's also an additional psychological lag, which is when you see a uranium price go up that quickly, the utilities, they need to see it there for a while before they're prepared to use it as a basis for their pricing decisions.
So if I look at someone like Global again recently, they've announced their third contract signed. I don't think they're particularly big contracts, let's be really clear about that one.
They're good-sized contracts based on what I've read.
Right, okay, but they haven't signed away everything. They haven't always signed away their life, as my point. They just want partly they want to get something in the bag. Let's get something in the bag. We're making money at this rate, because they've got great economics, because they've got like a high-grade starter on the West Flank. But do you think, who else is going to be able to kind of drive those contracts which are signed, which allows everyone else to kind of see the number rising quickly? How do we go from 68 to 88, I guess is my point.
Well, the other thing is, how do you report the price of a market-related contract that's got a floor and a ceiling? Yeah. So Boss Energy's announced some contracts. Yeah.
Duncan doing a good job over there.
Yeah. Timing it beautifully.
Yep.
So that's going to be the difficult thing for investors to follow until we see more contracts and more liquidity around that. What I think investors can take from this conversation is the fact that you're seeing $68 as the reported price does not mean that that's what you would expect a company that's in a position to contract, as we stand today, achieving in a contract.
Believe me, I expect most people, retail invested in companies, will be using the $100 number.
So and that's probably not right either.
Right. So that's because I'm a millionaire at $100. Not, I don't want to hear 68. So, but it's really a question. How quickly does that move and advance to a point where you're capturing some of those gains that spot is seen to something, well above center price and well into the money as a result. Because you guys put out a number. I think you put out a $60 number and an $80 number.
65 and 80.
65 and 80 a while back. 65 was solid. The 80 happy days, right? So for you'd be looking. Well, I'm kind of keen to see this thing move through into the 80s. Yeah. You got a view on timing of that, or what are the drivers for that?
Okay, so now let's talk about potential drivers. We're in a high potential, high volatility phase in this market. So apart from the Kazatomprom news overnight, which can have a multitude of secondary effects.
Right.
Bearing in mind that Kazatomprom announced last year that they were achieving record sales.
Yeah.
What we deduce from that is that every utility who's got a contract with Kazatomprom is exercising the maximum upward flex.
Which was...
Usually 20%, contract by contract, but typically 20%. There might be options on top of that.
Yeah.
So if you're squeezing every last pound out of a Kazatomprom contract, so at the same time where they're having some production challenges, they're not having problems selling their pounds, and it's widely speculated that they need to acquire pounds, either off their joint venture partners in Kazakhstan. or even potentially from the open market. So there's a multitude of secondary effects. And most of those assets are in joint ventures. So when Kazatomprom says we're not going to achieve our 90%, that's some Urano pounds that they're not going to get. That's some Cameco pounds that they're not going to get. Some Uranium 1 pounds that they're not going to get. Some of the traders aren't going to get those pounds. We've got joint ventures in Kazakh. Okay, that's the first thing. Now, the other thing is the market, and particularly the market participants that I've been talking to in London this week, they are intently watching for the US Senate passing the Russian sanctions bill.
So that's gone through the House, now it needs to go through the Senate. Again, is there timing on that?
No.
Right.
So
okay.
That's going to be a bit frustrating. I've had opinions ranging from this month through to the end of March, and we just don't know. There's nothing that's pushing the Senate at the moment. There's no particular horse trading on other issues that could interfere with that. So we just need to wait and see. But there seems to be a feeling, even amongst the US players who I've been talking to, that there's a high likelihood of that occurring. Now that is going to be a significant catalyst for financial players entering this market. I think we're going to see the ETFs start to get engorged with generalist investor money. If we don't see investment directly into Sprott Physical Uranium Trust, we'll see it come in through the allocations from these big ETFs, the same with Yellowcake up in here in London. So the market's watching that for having a significant catalyst effect, if it indeed goes that way and takes place.
I'm intrigued on the timing, because America doesn't have a plan B. I know they've talked about a bit of money, not a lot of money, and they've been allocating some money through IRA, but it's all way downstream. It'd be nice to sort of see some of the miners, get back to the 1950s America, where they're actually putting money where their mouth is, helping, right? So a little bit of that. So America's starting to wake up. We've been talking about it for 3 years. They needed to, and they are.
An aggressive version of sanctions. In the time that we've been talking about the different sanctions bills that have been put forward, you might remember there was a soft sanctions where it was introduced until 2027. This is like the Johnny Walker whiskey of sanctions.
Really?
None of this Budweiser light.
Johnny Blue.
Well, I'd go black. Because there's a waiver. Basically how it works is the ban kicks in 90 days after it becomes law. So that's through the Senate.
That's aggressive.
President Biden signs it. 90 days later, the ban kicks in.
Yeah.
There is a waiver,
yeah,
but the waiver is fraught with uncertainty. And the one thing that's known about the waiver is any waiver applicants, their identity becomes made public. So the utilities are concerned about a public shaming aspect to the waiver that's going to be difficult for them to navigate from their public support.
Again, if I'm Putin from Russia, I'd be like, F you. You sign that? Okay.
And then we can see potential retaliation. And I don't think it's likely.
Retaliation, other than the amount of sanctions already in place. And
But retaliation from, for example, President Putin says, well, if you're going to create all these conditions on our nuclear fuel,
I'll stop now.
Look it elsewhere.
Yeah.
Now, I don't think that's likely, but...
Well, it's a small sector.
Really
it's such a small sector. I don't think it's going to hurt their balance sheet. I think the Ukraine war's hurting their balance sheet, but I don't think, not selling to the US is going to harm them. But anyway, we'll see how that all plays out. What are the other things that you sort of, catching your eye in terms of that Canadian explorer developer market? The US is, again, in terms of the explorers are waking up. I think... I was going to say some better than others. Yeah, some better than others, and some more likely than others to actually be able to supply into the market. I like the company's actually going to do something. So you're going to produce pounds, not talk about producing pounds. What are you seeing in the North American market here? Because we've got some big boys like Energy Fuels and I guess UVC talking their book as well. We're seeing lots of new entrants in North America.
Well, look, if ever there was a chance for a North American producer, either who are close to production or are restarting, now's the time. Yeah. Now's the time. There's such strong support amongst the utilities for North American, US origin.
Homegrown, yeah.
Homegrown. Now they can't get even a small proportion of what they need from the US, and that's where they start to look elsewhere. Obviously,
This is going next.
Australian uranium is well regarded, Canadian uranium is well regarded, and Namibian uranium is well regarded.
Well, there's where it's going next. Actually, I was just kind of setting it up. We're going east, west, and then there's a whole bunch. There's a bunch of boys in the middle. Yourself, right? Yourselves included. Namibia, Niger, predominantly. What does that do for you? Because there's a tug of war going on here, and at the end of the day, you got to do the best thing for your shareholders. But at the same time, the lure of capital coming out of not just China but Middle East as well. We talked about Riyadh's conference this week, and others will be clamoring for this. The French, obviously, with what's been going on in Niger, will be looking, and as you say, having going from 8 to 14, they're going to need to kind of secure their supply. There's the not homegrown stuff, but there's their home team. I've got fingers in lots of pies around the world, but Canada's a difficult place to actually produce pounds. We've got lots of licensing, permitting issues. Time frame there is another thing. The Americans are a lot of £500,000 here, £500,000 there. It doesn't kind of sate the appetite or demand. So how do the African players play in this geopolitical arena, which we're starting to see getting a little bit more fervent?
It's a great time to have a uranium origin that can trade and be utilised anywhere in the world. And that's what Namibian origin uranium is. That's its key advantage in a bifurcated market. So if we fast forward, we say, right, the Russian sanctions bill now has been introduced. We thought without retaliatory measures from Russia, we're now into a bifurcated market regime.
Yep.
Namibian uranium can go anywhere. And that doesn't mean that we're going to be signing up contracts with the Russians, but it means that if our uranium finds its way into Russian materials, such as there's a number of mechanisms like return feed, our Namibian uranium can go anywhere without getting caught up in a bifurcation.
And you're not talking about bifurcated in purely in financial sense. Hopefully, I think that will be a knock-on effect. But he's talking about the I guess it's the workarounds is really what we're talking about here for African players, right?
Location swaps.
Yeah,
because it's hard to get uranium.
It's inevitable.
Kazakhstan at the moment. Workarounds with return feed, with previously supplied Russian EUP.
Yeah,
there's a bunch of different things. Now, on the one hand, that makes it very attractive and appealing to traders, including the big players who've got their own trading capacity. But then at a strategic level, it becomes very interesting. Let's say you're an SMR developer and you're starting to see that maybe you need to invest in some uranium so that when it comes to selling your product, you've got supply secured. Well, if you want to sell your SMRs all around the world, you want Namibian uranium because it can go all around the world.
Yeah. Well, it happens in oil, right? Iranian oil finds its way into markets it shouldn't be, including the Israeli market. So it's inevitable these workarounds will happen, and at the end of the day, finance guys work out how to do these things. Interesting times on that front for Africa. Again, bifurcation in terms of price. Again, I wonder when we start to actually see that
we'll
moving.
Start seeing a premium fairly soon.
Yeah, interesting times.
And when I say all around the world, I don't mean Iran and North Korea. No one's allowed to build a bit.
Wink. No.
No wink. No wink, Matthew.
Oh, Mr. Trump would make it happen. He definitely would. He's friends with everyone. Right, okay, I think that's a nice little roundup for this week, and I thought it was a good session, actually. I know we kind of do it's kind of formulaic type structures where we sort of talk about bundle of the week, etc. I do miss that, but I really enjoyed today's conversation because there's so much going on at the moment. It's super exciting. Should we get our party hats on and have a drink?
Yeah, I think...
the 100 Club?
Right?
We like it? Let's do it.
Join the 100 Club?
Let's go. Let's do it. Okay, see you soon.